Massive home loan losses, the Reserve Bank has changed its outlook, and construction industry woes. We're going to cover that all in today's update, starting with interest rates. The new Reserve Bank Governor Michelle Bullock had her first meeting in October, and it was a bit of 50-50. She actually held the rate. So the cash rate stayed at 4.1% off the back of, a lot of the most recent rate hikes they've had. They've sort of said that it takes 12 to 18 months to pass through the economy, but they're quite concerned. They're worried about inflation, its impact, and even cavered the media in saying that there is scope for further rate rises in the future.
Now, we're seeing a lot of the fixed rates that were ultra low during the pandemic coming off in the next few months. So the Reserve Bank is eagerly watching how that's going to affect things. There is also a 62% chance that there will be a rate hike before the end of the year,
which is a big stark contrast to earlier in the year where some of the banks were even predicting there was a case for rate cuts with, just job, it was a tough employment market, different thing. Then migration's obviously very high, which we're going to come back to a little bit later.
Now, the Reserve Bank has a target rate of inflation between 2 to 3%, and inflation with the latest data is sitting around 5.2%, which has been driven higher due to petrol costs, rents, and services inflation. Oil prices have recently gone up, making petrol more expensive, and this could lead to higher inflation as everything becomes more expensive with transportation costs going up.
Yeah, the big focus has been wages and services inflation. So services like finance, insurance, hairdressing, all that is costing more and more, and it's affecting the inflation outlook.
Now, some experts think the Reserve Bank of Australia will need to keep interest rates higher to control inflation, and that's where we've seen some expectations shift. Like Jaden said before, we had some of the big banks expecting rate cuts to happen at the end of this year. Now they're sort of saying May of 2024 or even later. So initial thoughts have started to shift, especially given that inflation is still lagging and taking a longer time to come down than expected.
The Reserve Bank will consider multiple factors. If they see unemployment slide, if they see inflation keep going up and up, they're going to have to make pretty drastic actions there and potentially hit the rates. But as we covered in our video earlier in the week, a lot of the banks are predicting we are pretty close to the top of the cash rate, 4.1%. Three of the four banks are saying that's as high as it's going to go. There's only one outlier, NAB, that's saying there's one more rate increase to go. So the good news is we're pretty close to the top. It seems, outside of some crazy inflation figures, and it means there's a bit of reprieve there for homeowners.
And if you find value in our videos, please consider hitting that subscribe button, as it does really help out the channel. And a big thank you to all our subscribers for your support. Inspires us to create more content. We hope you enjoy.
So interestingly, our next point now, the Commonwealth Bank of Australia, Australia's largest bank, has had some massive losses in their home loan books. I'm not talking write-offs and losses, I'm talking loss of market share. So there's been some big shifts through the pandemic, through that whole last couple of years. They've dominated the mortgage market. They were the quickest in processing. They had some of the better credit policies compared to other banks, and they're offering a lot of first home buyer incentives. But for the first time in a long time, CBA's home loan book has shrunk for the second consecutive month.
Yeah, and that's off the back of their cashback campaign that they ceased in the middle of this year. They've seen their loan book drop by 0.3%, or to put it in a different way, $1.4 billion. So it's a fair size of market share they've lost.
Yeah, in contrast, ANZ's home loan book rose by 0.7% in the same period. Westpac, the other brands, including St. George, Bank of Melbourne, etc., increased by 0.6%, and NAB saw a little rise of 0.3%. So it's been interesting, even from, our perspective as mortgage brokers. We have seen the CommBank be the first mover in a couple of spaces. So the cashback was one where they moved also via their subsidiary Bankwest, and we're one of the first banks to drop that and say we're no longer offering cashbacks as incentives to move banks. We also found them changing their discounts that they're offering to new customers.
Yeah, that's right. They really pulled back from the market, and they were the ones saying that the loans that were being written at ultra low rates were unprofitable and the bank wasn't making margin on it. So we saw CommBank really pull out, raise their variable rate, signaling to the rest of the market saying, this is where we should be. This is where we should be competing, not down here where we're not really making any money. As a result, we can see Commonwealth Bank has lost a lot of market share. So the fact they pulled out of the refinance rebates, and they've also tried to move on their rates, has really seen them lose a lot of their ground share.
Yeah, interestingly, again, from a customer perspective, we've had clients that might have had loans 6 months ago with Commonwealth Bank that are getting better discounts than they give new to bank customers. So this is something we don't normally see in the market. It's just because it was ultra competitive a couple of months ago. Not so much now, but they are starting to come back in because they've had this huge loan loss and loss of market share.
Yeah, we've particularly seen that, as Jaden said, with their retention pricing. So existing clients we have with Commonwealth Bank, when we tell the bank we're actually looking at alternative options, they've been great at coming to the party and being really sharp. So if you do have a loan with CommBank and you do want a review, get in touch with us. It's something we're happy to look into and see if there is anything we can do to sharpen the pencil.
There is good news though. There still are banks offering cashback. So if you do have a loan with CommBank and different ones, the likes of ANZ, St. George Bank are still offering cashbacks to move banks. It still does cost about $1,000 or so to move lenders. So that's still good, helps a bit of competition in the market, but it's definitely worth staying on top of that.
And if you like our videos, please remember to share, like, and subscribe to stay informed with all things property and finance. Jaden, let's move on to the last one, which is the construction industry and the woes they're going through. Talk to me about what's going on here.
Yeah, so the ABS, Australian Bureau of Statistics, has shown some pretty worrying trends with the latest housing construction data. The number of loans for new home purchases or constructions has hit its lowest point since 2008, the global financial crisis. In the last 3 months leading to August 2023, lending for new home loans were down, like construction loans were down 30% compared to the same time last year.
Now, this is a surprise given unemployment levels are at record lows and there's been strong population growth. But according to the Reserve Bank, it's not expected to see an uptick in housings to start until the second half of 2024. So the Reserve Bank had been very much expecting that construction industry was going to be subdued for a little bit. And I guess it's a knock-on effect. It's like anything else. It takes a while to get that momentum back into the marketplace. And we're starting to see that with record low construction based on the ABS data.
Meanwhile, the opposite force of this, and the one that's really pushing the property markets across Australia and even the rental prices, is population growth. The Australian population growth grew by $563,000 last year, mostly because of overseas migration. Now, the Australian National Cabinet has announced they're going to be building 1.2 million homes over 5 years, but it looks pretty unrealistic because Australia has only once built more than 220,000 dwellings in a single year. So there's a pretty huge shortfall there that's potentially going to still prop up the property market and keep supply pretty tight for the next couple of years.
Now, high costs for materials and financing, coupled with shortages in labour, make the government's target extremely unlikely to be met, along with the fact that there's major projects happening across in places like Queensland, where they've got the Olympics. Things like that will make it very challenging for the government's 1.2 million homes over the next 5 years. So it'll definitely be interesting to see.
And this is one of those unfortunate problems that doesn't look like it's going to go away quickly. The government's target is to keep Australia growing, to keep people in jobs, and we need people here to even be able to build homes. We have skill shortages and that sort of thing. So it looks like this problem's potentially not going to go away. I'd potentially see that the government might make moves against short-term accommodation. We covered that in a video last week that we've seen it happen in Victoria, where there's been some levies placed on Airbnb. In New York, it's been flat out banned, basically, which has released a bit more housing onto the market. But given there's not a huge short-term accommodation market in a lot of the cities, it's not like Byron Bay and the coastal markets where that's much more common. I think it's not going to really fix this problem in the short term. There's no easy solutions here.
Yeah, even some of the other solutions we've started to see, we've seen parents and their kids going together to buy houses together because the affordability is a real challenge. And the fact that it's so difficult to get in the market, we're starting to see more people in the households. So the number of people in households increasing. Guys, here at Hunter Galloway, we are mortgage brokers. We deal with people Australia-wide. So if you need assistance, reach out with us directly on 1300 088 065 or visit our website huntergalloway.com.au. And we'll see you next time.